Hey traders, checking in on the stock market today. So we had some weakness first thing and some gap down opens, which led to some good buying opportunities because gap downs are for buying. In a general sense, we certainly still need to establish a game plan, but it helps us know which direction to be looking. I took advantage of the NIO gap down. We'll go over that trade at the end as we check in on the charts and see where we stand in the broader market. So the S&P 500 futures chart, we broke to a lower low, so a little daily lower high and lower low, but obviously not much follow through for the bears, and it was the financial sector that stepped in today and gave the bulls some confidence. There was one period there where it was close to all of our major sectors dropping to the low of the day at the same time, but XLF didn't drop to a low, and now we have a solid bullish candle on the daily. So with a lower high and lower low, that means we zoom out, and we are looking for a weekly higher low. Anything above 37.22, and looking at SPY, again, there is the dividend distribution as a factor, but anything over 371.88 is a weekly higher low on SPY. So there is still a lack of any kind of major fear in the broader market because, again, we only see that when we're seeing all of our major sectors at the lows at the same time. And that has happened recently, but only for periods of about 90 minutes. Again, if you see that for an entire day, it is a very significant bearish trending day. So the broader market is still hanging on because there is rotation going on. There is not money leaving the market in a big picture sense. The NASDAQ futures broke to the lower high and lower low as well. Same thing though. And this is where newer traders get crossed on time frames because it is possible that this daily downtrend just means zoom out and scout a weekly higher low. Now, the bulls didn't create a ton of space for themselves to set this higher low, but if we pull up our fib retracement tools and look from the all-time high to the low of the pullback, that bounce did go over 50% to about 60% plus in terms of size of the retracement. So again, remember what our most likely scenarios are when we're under the 382 retracement. It's still bear flag possibility. 50% plus, we start looking for a tightening range. So we can absolutely see a weekly higher low form here. And again, that's where a newer trader would look at this and say, okay, we just confirmed a downtrend on the daily, I'm going bearish. Meanwhile, that's just setting a weekly higher low very shortly after, and it's looking in the wrong direction. So I'm not looking bullish right now, but, well, I did exit a little bit of my bearish position. Yesterday, what I did was just micromanage my QQQ bearish position, which I'm using the ETF for at this time, SQQQ, because Fidelity didn't have QQQ shares available to short. But I was micromanaging it yesterday because the trade didn't come to me. I wanted a gap down in airliners and I didn't get it. Today I got the gap down I wanted in NIO, so I just left SQQQ alone. Do your thing. I'm focusing on the bounce, and I know that the bounce is just looking for an hourly lower high, so I'm not going to mess around with my short position. But into the close, I did cover 20% of that short position, and again, that's just me slightly leaning a little bit directionally bullish just because it was a nice bounce across the board. Now, we can definitely see the bears keep control, but we did change the hourly trend with a little higher low and higher high, which was the decision for me to exit 20%. So definitely still have 80% of that position, but what I'm watching for now, if we get any bounce followed through and break the high of today, we're looking at our daily resistance, which is the high of Tuesday. And again, we need to see a setup back to the bulls. If we look at the 12-hour time frame, it's not giving us any information the daily is not giving us, so never mind. I was going to be watching for the potential of inverse head and shoulders kind of setup to be shaping up, but we would need a green day tomorrow to be watching for that potential. It's way too early to be looking for that at this point. So all about QQQ for me still, and again, that's just because the names that I am trading most often are more correlated to QQQ. So I know the broader market's holding on a lot better, but I am most concerned with the Qs. IWM. Gap down and a big bounce. So holding 207.21 and a playoff of that level, we held it by less than $1, which is less than 0.5%. And again, look at the volume, massive volume. Looks like we got a dividend distribution to be dealing with here as well. But a solid bounce and an hourly bull flag into the close. So what we're going to be watching for now, if we get follow through on this bounce, we're scouting a daily lower high. Again, we have a massive range, and we gave back 90% plus of that bounce. So a daily lower high is the most likely scenario. And again, we're going back to the retracement game. How much bounce follow through can we see? Is it enough to be looking for this equilibrium to continue playing out, which would look something like this? Or is it a weak bounce? Are we topped out already and we're just going to see weakness tomorrow and keep the possibility of a bear break of supports on the table? Those are pretty much the two scenarios I'm looking for. XLF. So again, today was the day for the bulls. Look at that low of 33.04, and we broke it by 4 pennies straight into the bounce. And this the point in time where it was close to all of our sectors hitting the low of the day at the same time. We held that low right here. So that was right around 11 o'clock. And then once we saw the new high of the day, the new high of the day pretty much made the bulls real confident. Break support by 4 pennies and then recovered to a new high of the day. And you know that it's a clear shift in momentum. So a pretty notable bounce on XLF. Keep in mind the bigger picture on all of our laggard sectors, which are grouped with XLF as far as their correlations. We're looking for weekly higher lows. This weekly chart on XLF looks perfectly fine. There is no red flag on this chart whatsoever. We would have to lose the weekly EMA 12 for that to even, for a red flag to even pop up, and that's all the way down at 32.17. So XLF is just fine, and that is the major reason why SPY is just fine as well. Healthcare, so we broke the key support, but again, significant bounces out there. Didn't change the hourly trend bullish yet, so we will need an hourly higher low and higher high into tomorrow if we're going to be looking for follow through. But again, you look at the weekly time frame, and it's looking for a higher low. There's plenty of space off of our low to be scouting a weekly higher low. So again, whenever you're seeing a scenario like that, that sideways range, best case is a bear break straight back into that setup, because then that has everybody looking in the other direction. Because think about it, and the way I analyze charts, I try and look at it from a bull's perspective and a bear's perspective. So I'm getting the complete picture. So I look at this chart and say, okay, if I'm bearish, I'm watching this channel, I'm just waiting for the break. I've been talking about how this support is key, because if this channel breaks bearish, then obviously that's bulls losing their bull flag attempt. And that level broke today at 114.03. And again, if I'm a bear, great, bear break. That's convincing, it's as clear as can be, and now our top of the bounce is set, and we're gonna look back down towards the lows. And if the result of that is a V-shaped bounce to a new high of the day, I am not comfortable in any way, shape, or form as a bear, because that to me is a fake out. That's saying, wait a second, how are we closing near the high of the day when we just broke a key daily support that has been holding sideways for the last 6 days, 7 days? And if I'm a bull, I would say, great, that's a nice recovery, and we're still looking okay. XLV, who do we got? Biotech sector, massive bounce. Look at this double bottom, and I wasn't watching this double bottom, but man, you cannot have a better bottom fishing opportunity with the absolute free fall from the last 2 days into a gap down open right off that support, which held by 24 cents. It is a textbook, exactly what you want to see on a bottom fishing play. So then from there, we had a significant morning bounce, little consolidation midday, and closed right up near the high. So a very significant bounce. And again, it's the same thing as same thing as IWM. So we're looking for a daily lower high on this bounce. And again, the question is, how much bounce follow through do we see? Do we create enough space for the bulls to try and change the daily trend with a higher low and higher high? So a nice defense. How much follow through can the bulls put together? SMH. So same thing, bear break of the daily support into a buying of the dip day. Again, it can go either way. We can definitely see a short bounce and then continued pullback, or we can see weekly higher lows set and head back to the highs. So you notice in all of these videos where I'm laying out scenarios, as far as a lot of the most likely scenarios that I lay out end up playing out, but I have no idea on a day-to-day basis which one it's going to be. It's literally in the moment, and every hour we're getting more and more information as far as the constantly swirling probabilities as far as what's the most likely scenario. So I am watching now for weekly higher lows to try and be set. I know XLF is a major reason that SPY is holding on just fine, so I'm making sure that the XLF bulls keep that control, and it's all about QQQ. Can we set a weekly higher low and regain daily control? And that's still going to require at least a few days of work from these bulls. And SMH is very similar to QQQ right now. TAN, support, 80.80. We held it by 27 cents. So again, another picture-perfect bottom fishing play. But anything under 92.68 will just be a daily lower high. And this is one of the weaker charts. And the bulls have to prove it. Change the daily trend or it doesn't mean anything. The bounces are nice for day trading, absolutely. But if you do not change the daily trend, you're not going to see a notable shift in the momentum. It's worth watching for. We're not seeing it just yet. MSOS USMJ, gap down, dip for buying. And again, we are just looking for a lower high on the daily to be the result of this bounce. And at this point, the bulls are just hoping for a big enough bounce to be looking for an equilibrium. We've got continued IV drip of New York legalization headlines, but we definitely need a lot more out of the bulls than what they've shown us over the last week. Today was a nice day. Follow through needed. Create the space for a daily trend change to try and set up. The VIX, so broke to a higher high and closed at the low of the day. So not really doing much in either direction. We broke to a lower low here just by a tiny margin, and then we broke to a higher high by a small margin, and here we are right back down weak. And again, on today's big green candle, how it started to not see all of our three major sectors hitting the lows at the same time, we know that that's not going to be a sustainable green candle, because the only time you will see these big, large green candles is when that happens. If it doesn't happen, it's a red flag for volatility bulls. The dollar had its bull break, and it's continuing. This is follow through. So again, we are creating more and more space. And think back, I'm not going to take credit for nailing the dollar, but I'm going to take credit for looking in the opposing direction of the narrative, because it was a very crowded trade and because the technical levels told me there was a very key support coming up. So we reached a point where I just said, okay, well, who's left? We've been talking about how easy a short the dollar is for a month. Who's left to short it? We have a key support, and that is why we were looking in the other direction. And now we're seeing all this follow through on this bounce. So we're watching for a monthly trend change from here as what has to happen. And again, the more follow through we get, the closer and closer it's going to be to an inverse head and shoulders possible setup. But again, I'm looking 3 months down the road there, way too far ahead. We'll all be dead. Let's stick to the daily and the weekly. We're watching the daily uptrend. Gold faked me out. Fortunately, I wasn't acting on anything, but from a technical perspective, absolutely faked me out. Look at that candle. When we were up at the high of that candle, I said, all right, bull break is taking place of this 4-hour falling wedge, and we're looking up at the high of this move. And the next thing I know, there's a bond auction, and we're back down testing the low, and here we are right back in the pattern. Nothing changes. So big time volatility, and bulls unable to prove it. Sticking with this 4-hour pattern until it breaks, and a failure from the bulls this morning. Silver, again, weaker. Had a big bounce as well, though. Actually, it's probably stronger today. XAU, XAG chart will tell us. Big drop, showing us silver gaining on gold. Now remember, silver had a climax kind of flush this morning, and then a V-shaped bounce. And again, follow through is needed on all time frames. We need an hourly higher high, then we need to change the 4-hour trend. So we're not really getting proof of anything at this point. All we're getting is a bear break with a lack of follow through. If we change the 4-hour trend, we've been in a 4-hour downtrend at this point since the 18th, a week of a 4-hour downtrend. So if you break support, which we did, and then if you change the 4-hour trend bullish for the first time in a week, again, it stands out to me as, okay, maybe that's a little bit of a climax flush, trigger some stops, and then looking for some follow through in the other direction. But again, I'm not acting on any of this. I'm just holding my position. Stop losses aren't being hit, and hoping that it makes my day-to-day task of offsetting metals weakness easier. And I mean offsetting by day trading to try and get some of those losses back. GDXJ. So $44 was the low. The bulls are hoping to hold that level. We must break the high of today tomorrow. And then we're looking for a daily lower high to be the result of the bounce if we get that. But again, the metals have a lot of proving to do. Oil, CLK 2021. No follow through, so we were watching for the potential of a 12-hour inverse head and shoulders, but the size of this pullback is more than the bulls want to see. And again, you can look at the retracements. If we're going to see a healthy pullback for a little right shoulder and then a confirmed trend change, you want that pullback to be 0.382, 0.5 at most, and at this point we gave back 90%. So it is still a possible 12-hour high or low, but the odds of confirming the trend, which is what the bulls need, are much less likely. So a little double bottom at support, but if we do not break 61.34, bulls aren't proving it. And we can definitely see further daily consolidation, and we're close to the first bear cross of the EMAs 12 and 26 since they crossed bull when we had the Saudi news and the bulls really took off. So that stands out to me if that bear cross were to take place. Natural gas, trying to fend off that daily bear flag, have to get over the high of the bounce 261. If they do, we'll zoom out and we'll scout a weekly lower high. But bulls attempting to build a base of support here. So NIO, the trade that I wanted came to me. And when that happens, I have my bigger days. So today was a really nice day. And it's because it's one of my edges as a trader, oversold bounces. I laid out the game plan of what I want to happen. It happened. And I took the trade. So I traded NIO. And when I don't live stream on Thursdays and Fridays. So I am way more active trading. I am scalping like a madman. And on NIO, I probably had 35 orders today, and I probably had 10 to 15 different trades with scaling in and scaling out. So I was playing in both directions, but I'll walk through the major trades. There were a lot of, small wins or small losses. And when I was scalping, when I am scalping that much, it's just me racking up half-day maker, half-day maker, half-day maker. And if I do that 8 times, I've now got a 4-day maker, and it's very worthwhile. So I was doing both directions, gap down open. I nibbled pre-market because pre-market a 5-minute nice equilibrium was shaping up, and I knew I was going to be buying right when the bell rang, so I just initiated a position here right around 35, and then we got the bull break right into the open, and then it was just a monster move right off the bat. So a little bit pre-market, a little bit right at the open, and then I'm just starting to scale out very quickly. Because if you go that hard, that fast in 10, 15 minutes, 5% move in 10 minutes, I am taking those gains every single time. And again, that's my day trading mindset, but that is what works for me. So I was scaling out and I scaled out. From there, I looked short and I did make a short entry. And again, I forget my exact levels because I have so many scaling orders, but solid win on the morning. I think that was a day maker trade there. Then I shorted for the pullback, was fairly quick about exiting, and then I saw the new high and was just patient. I didn't make another bullish entry at that point. So one bull, one bear, and now I'm observing. And I'm observing just QQQ here and NIO here on these monitors. And over the last few days, during my live streams, I've been saying constantly, NIO just so much weaker than Tesla, so much weaker than QQQ, bearish correlation. We had the Chinese stocks dumping yesterday, which magnified the downside. So that's a pattern. 2-3 days in a row, clear bear correlation. And then all throughout this morning, on the initial bounce, and then most notably through the late morning, it became very clear to me today's different. We have a bullish correlation with QQQ. When you notice a correlation, and most notably a correlation shift, something that's different from what has been the norm, favor that direction. So I'm looking in both directions, and I was scouting short, and I did short it again, which I'll point out in just a second, but it got to the point where I realized, and really it was midday, so I'm going to hold off on that. 2-minute rising wedge was the next short. So I didn't rebuy for the bull new high of the day. I'm watching QQQ at that point, and it's extended, and I say, okay, so what pattern am I watching for? I see bull breaks without a ton of follow through, and I know that we have to see some 15-minute consolidation because we're coming off the low. We haven't changed the hourly trend. So it was a 2-minute rising wedge I was keeping an eye on. And at that point in time, let's just align with things. So 10 o'clock, 10:20. What was QQQ's 2-minute time frame doing? It was up at the highs. And again, this 2-minute really extended. Just a move from 310, almost a 1% move with no 2-minute consolidation. And so it was a bit extended, enough for me to be looking for a rising wedge. So I drew the rising wedge, posted in the chat room, NIO, potential rising wedge. I made a bearish entry, and then it broke bearish and pulled back. So that was nice. But then I knew we were just looking for a 15-minute higher low. So again, I'm scaling out of my position. I'm not nailing tops and bottoms, but I'm getting some nice meat on these moves because these ranges are so massive. 7% bounce, 3% pullback, 5% follow through. There is a lot of pieces of the pie to grab. So at that point, NIO, we're looking for a 15-minute higher low compared to the low of the day. And here is where things really stood out to me. Crystal clear, NIO is way more bullish than QQQ. It is still correlated. It's pulling back on the 15-minute time frame because QQQ is dumping to a new low of the day. And it was just a complete shift where we had a strong start and up. Here we go again. Bears in full control. $5.50 drop straight from the high of the day. And the fact that NIO, again, look at your retracements. So retracement gave back 100% of the move and then maybe another 50% of what the initial bounce was. And you look at the NIO retracement and we gave back 50% or so, maybe a little more. From the open, it was more, 60, 65%, but again, not even comparable to what QQQ did. So I know I'm looking for a 15-minute higher low on NIO, and I'm looking for QQQ. Just give us, a little 5-minute oversold bounce to help NIO position for that 15-minute higher low. And I messed up this trade because I got faked out. And I was scaling in bullish for the 15-minute higher low, and this one got me, bear flag. And it's ironic that this one got me because I've been talking in the chat room about plays where 5-minute bear flags will break bearish and then mark a bottom and not see follow through. This was on the 2-minute time frame. But I was scaling in, and it was probably, honestly, I just initiated my scaling in a little bit too early. But that's probably what it was. I was anticipating QQQ to at least try a 15-minute higher low versus its low of the day. And so I was starting to scale in to NIO as QQQ was approaching its low of the day. And then when QQQ saw another leg down, again, NIO is not immune to that correlation. It just can hold up better. So it did drop lower. My average was probably not where I wanted it to be. And so I probably exited with either a small win, break even, or a small loss on this little bounce because this little bear flag told me up, another leg down, haven't found the 15-minute higher low yet. So then I had to watch being out of my bullish 15-minute higher low position because I wasn't comfortable. And I had to watch most of this, not all of this, 5-minute time frame. So I had to watch and miss this move. And I said, you got. There's your 15-minute higher low. Would have been a great trade. And, just lessons to learn for next time. No big deal overall. If that's what my biggest mistake is on the day, leaving money on the table, which is what I want my mistakes to be, not losing money, leaving money on the table. And that's my conservative style. But I recognize the cup and handle, and I bought this 5-minute consolidation. And I was actually, that is when I was real confident with the QQQ bullish correlation. Because the entry that I made on this 5-minute consolidation, I saw this low at 37.11. I saw the 5-minute EMA 12. We have our resistance. We have our inability to break resistance into the bull flag. At that point in time, 1140, QQQ. I'm going real in depth here. 1140. QQQ is looking for a 5-minute higher low. Solid bounce off the low, creating the space for a 5-minute trend change attempt. I didn't know if QQQ was going to confirm a 5-minute trend change, but again, I was looking for the higher low, and I knew that NIO is positioned really well if any kind of meaningful bounce gets going on QQQ. So the entry I made here, I saw 37.11 support hit, and we moved off of that level. I said, all right, I'm going big, and I'm playing off that level. So the entry I made here was 150% larger than what my other entries were for an average normal day trade on NIO. And what that means is I have a closer stop level nearby because if 37.11 breaks at that point, it's not a cup and handle and I'm wrong. But what I do is I start scaling out a little bit more quickly. And so on this move, this initial move, I scaled out the 150% extra to just get back down to my normal position because that's where I'm most comfortable. And then scaled out into the strength again. And then in the chat room, right up here, I posted NIO at this point is 11% off its low of the day. No bull entries up here. And that was just a cautionary. I don't want anybody buying up here and getting FOMO. So that was my cautionary statement to the chat room. And then I thought to myself, well, that means Scout is short. So I started watching and I started observing some relative weakness to QQQ for the first time on the day. 1245 was our top. What was QQQ doing at 1245? High of the day. We pulled back here, and then not high of the day, high of the bounce. This was a notable pullback, but then we moved to a higher high. And granted, that higher high got no follow through, but let's look at the QQQ bounce compared to the NIO bounce. And that bounce topped out at 115, and at 115, it's a lower high. Higher high versus lower high. First time in the entire day, the NIO is showing us relative weakness versus QQQ. So I made a bearish entry. I was, again, posting in the chat room, QQQ rising wedge on the 2-minute time frame. Watching for, I think this is the one I'm looking at. Keep an eye out for a rising wedge on the 2-minute time frame. This is a fairly rough drawing, but this is what I was watching, and it was this bear break here. And I had it drawn so that the bear break happened, and then we bounced up and back tested and rejected, and then followed through. So that was enough for the NIO short to get the momentum that it needed. And I entered bearish on NIO, just a small starter position at 39.01 or so, just above 39. Real nice entry. It was my first entry, and I would have entered a second one because I was anticipating that QQQ on this bounce would potentially make it to this resistance, which we didn't. But if it did, I would have entered a second bearish position in NIO, just again scaling into a very extended move, knowing that we haven't changed an hourly trend, hourly consolidation is likely to happen, and just watching for signs in the broader market to dictate that taking place. And this was it. The 2-minute rising wedge gave me the follow through that I needed to be real comfortable in that short. From there, normally I would exit too early, but I left the computer and I went to work out for a half hour, and that allowed me to hold that short a good bit longer than I normally would have, because I know if I'm sitting there and staring at these micro moves, I would have covered here because I didn't want to sit through a 5-minute bounce and lower high. But instead I covered right around 38 or so. I covered here. We did see one more leg down. Actually, it was down here. I forget where. 37s. I missed this leg down, but I was pretty pumped about my exit because that was close to the low. That's it. But again, it was a great morning and one of my best. This month has been very odd because it has been no flow, 4 days of nothing to start the month, then just in the zone, 9 green days in a row, doing great, and then another couple red days where I'm day trading well, not really many notable wins, some small wins, but not enough to offset my swing red positions in metals and USMJ, and then the last 2 days just in the zone, doing real well. So this is the fastest I've flip-flopped from in the zone, out of the zone, in the zone, out of the zone that I can recall in recent past. So on the one hand, it's a good thing that I can get back in the flow that quickly. But on the other hand, I want to keep the flow and not lose it. So there's give and takes to that observation. That is a lot of talking. If you're still with us, do good things and have a good rest of your day.